What's up guys, Adrian here. In today's video, I want to focus on two smaller and lesser known Canadian REITs that focus purely on office properties. So I know what you're thinking, nobody goes to the office anymore because of COVID-19. People will work from home for the rest of their lives. Well, this is simply not true, and unfortunately many investors do feel that way. So office REITs took a beating in 2020 and continued to lag other REITs even to this day. So this presents a perfect opportunity for smart investors like you and I to capitalize on this fear. So one of Warren Buffett's most famous quotes is to be greedy when others are fearful. So it's time to be greedy, guys, on office REITs, because like every opportunity out there in the stock market, it's temporary. So in this video, I'll go over two small Canadian listed REITs you probably never heard of, but that I own myself, and show you exactly why they have great value and now is a great time to pick them up. So just a quick disclaimer, guys, I still feel that as an income investor or as a passive income focused investor, there is really no need to buy any single stocks or single REITs anymore. I myself have gradually transitioned from a portfolio of about 125 stocks and funds, half of which were single stocks and single REITs, to a portfolio of 40 stocks in total. So out of the 40 that I currently own, only 10 are single REITs and single stocks, two of which I'm discussing in this video. So if you're a newer passive income investor and you're still building your foundation portfolio, it might not make sense to buy or invest in these two REITs right now, because your priority should always be to build a strong foundation first with ETFs and closed-end funds, etc. But if you already have a strong foundation, if you're a bit more experienced, then investing in these two REITs could really make sense because they have great value right now and great income as well, right? But keep in mind, they are still single REITs, guys, so they come with their share of risks. Personally, I have $15,000 in each of the REITs I will be discussing, which equates to 4% of my overall portfolio. So the first one I want to discuss is Innovalis REIT. The stock symbol is INO.UN. Keep in mind, guys, for my American friends watching, this is a Canadian listed REIT. So this REIT is listed on the Toronto Stock Exchange, the Canadian stock market. So this REIT is pretty unique because although it's listed on the Canadian market, all the office properties in this REIT are in Europe. So France and Germany, to be precise. So automatically, this is a great way for us Canadians to diversify our real estate portfolio outside of North America. So let's check out a pretty important announcement that this REIT made back in June, as well as the latest Q2 results, which came out earlier pretty recently, which really will tell us what the NAV price of this REIT is, and then we'll compare it to the actual stock price to see if there's a discount, and there is one. So let's check out those articles together right now. Alright guys, so I want to share with you or show you two important articles for Innovalis REIT. So this one they released in June, on June 7, 2021, and basically they're saying here, what they're talking about is they hired a board or a committee to do a strategic review or like a mission review of this REIT. So this is what basically the beginning of the document talks about. It actually says the special committee's mandate was deliberately broad in order to enable it to consider a wide range of strategic alternatives available to the REIT. So they basically made a little committee to try to figure out what the future of this REIT will be. And you have some points here for their cash that they have on hand. So invest in core and core plus assets that meet the REIT's investment criteria and that are accretive to AFFO unit on a normalized leverage neutral basis of 50%, primarily in France of Germany. So they're saying they will continue to try to find more properties, office properties in France and Germany. That's fine. But what a new point here is consider investing up to 15% of total assets in other continental European markets, such as Spain, where the manager currently has operations and expertise. So they're basically saying they might expand to Spain, which for me is good news because, you know, it's all Europe, it's all non-North American exposure. And also what they're saying in terms of the structure, by the end of 22, they want to either acquire or dispose of current joint ventures. So some of the buildings they own, guys, is like they own 50% of it and 50% is with another company. So what they want to do is either buy them out or sell their share. They only want to own wholly owned assets. You could see here, right, in the second point, that will be their preference. So because of this, they basically started a participatory here distribution and asset recycling program, so or plan, sorry. So this is very interesting because what they're saying is in what I've highlighted here, they want to allow REIT unit holders, which is us, to participate in these profitable sales. So the REIT is intending to sell some properties here or some of their assets. So they want to give us 50% of the incremental profit generated from any such sale. So back in June, they're announcing here sales of 2 properties here, the Van and Rouet properties. I think they're both in France, which represent a distribution of just a little over 30 cents. So they already paid this distribution out, and I have to say, because it was a pretty big bonus dividend, because their monthly dividend is about 6 cents, 6.8 cents. So it's like getting 4 dividends as a bonus in one shot. So that was really, really cool. And basically what they're saying, you think, well, I already missed the boat. No, they expect additional properties or to sell additional properties and be included in the asset recycling plan. So basically what they're trying to say is we have a good chance of future bonus dividends. So that's one really, really awesome point I wanted to share with you guys, and a good news of why this is a great REIT to pick up. Also, regarding the regular monthly distribution, so this REIT has been really, really solid. They have not changed their dividend ever. It's always been 82.5 cents a year or 6.875 cents a month. And what they're saying is that the special committee performed a review of the sustainability of the REIT's current monthly distribution, taking into account blah, blah, blah. It concluded that the current regular monthly distribution level should remain in place. So take that as a good news. Always, they could always change, but I feel confident because of this statement here that their distribution will remain the same for the foreseeable future. And so it continues to put some comments and stuff. Of course, all these articles, I will put the links in the description below so you could read them. So the next article I want to share or show you guys is the Q2 results, which were just released on August 11th. So they go on to say there's the commentary there from the CEO that they're doing really well. He actually talks about the strategic review, which we discussed. But the point I want to show you guys, rent collection, everything you need to know about this REIT. So far so good, but the interesting part is really here, the capital market consideration. So what they're saying here, if you read it, is that right now the NAV, or the actual value of this REIT, is 1068 a unit. So this is the NAV of the REIT. It's how much it's worth. And if we compare that to the current price, and I'm making this video on August 31st, it's $9.60. So you could see that this REIT is trading at a discount because it's worth 1068, but the current stock price is 960. So if you actually want to calculate the discount percentage, you just take the big number 1068 divided by the small number 960 minus 1 times 100, and you could see that the discount is almost 12%. So it's trading at an 11% discount, which is really, really good. And this REIT right now, the yield, by the way, is pretty high. It's almost at 8.60%. So that is the current dividend yield of Innovalis REIT right now. So a really awesome pickup. The second REIT I want to show you guys and talk about is the Slate Office REIT. The stock symbol is SOT.UN. Once again, a Canadian listed REIT, guys. Now this REIT is extremely undervalued right now, even more so than Innovalis REIT. Believe it or not, the REIT is trading at a huge 39% discount compared to the 11% of Innovalis REIT. So on top of that, it also has a really conservative payout ratio. So it beats Innovalis REIT on those two fronts by a lot. So let's check out the latest Q2 investor presentation, which I have to commend Slate on. They make amazing slides, a wonderful investor presentation. So let's check it out real quick to see the numbers. So this is Slate Office REIT's investor update for Q2 2021. So this is the latest quarterly results here. And if we just scroll down, I have to commend Slate. They make really nice slides here. And right off the bat, you could see here that it's right here, 39% trading discount to the net asset value, the NAV. It's a 39% discount. So we'll check it out in detail in a second. The distribution yield or the dividend yield of this REIT is around 7.5. I think it's around 7.4 right now. So the slide I really want to show you here regarding the disconnect. First of all, I just want to make sure to point out here before we go into the discount to NAV, the payout ratio is very, very good for this REIT. It's 72.5%. That means they're only, in terms of covering the dividend, it's very, very well covered. They only need to give out 72.5% of their rents or of their income to pay the dividend. So it's well covered. It's a very conservative payout ratio. And I won't go into all the details of this REIT. They have really good tenants. They have really good rent collections. So that's never been a problem with this REIT. But what I want to show you is this slide here. So this is where they talk about the valuation disconnect. So just like Innovalis, it's trading at a discount, but this one is just insane. So basically what they're saying here is that if they add up all their properties, the value of their properties, land in Canada, Greater Toronto area. So they have, most of their properties are in Canada. They do have 2 big office buildings in Chicago. But combine them all, and this would result in a NAV price of $8.77 a share. So right now it's trading at $5.33 a share. And if I look at it today, it's at $5.38 a share. So it's pretty close to what they're saying here, $5.33. So this is a 39% discount. This is absolutely humongous. I just don't understand why there's such a big disconnect. It's probably because, like I mentioned earlier, the fear of these office REITs. People think that office REITs are going nowhere. It's not true at all. This is hugely undervalued. So this is a really, really awesome REIT to pick up. And even, they have slides on why this is a great investment opportunity. And they even compare themselves to other office REITs in Canada. You could see the yield here. It's one of the highest. Just True North Commercial REIT beats it. And that's another office REIT that I have, but I left that out of this video here. So as you can see here, Slate Office REIT 7.5 distribution yield or dividend yield is well covered and among the highest in the REIT sector. So really, really good pickup here, Slate Office REIT along with Innovalis as well. So there you have it, guys. Innovalis REIT, Slate Office REIT. For me, these are the most compelling single Canadian listed REITs to invest in right now. Innovalis with a really high yield, strong possibility of more bonus dividends, as well as a strategy shift to purchase other properties elsewhere in Europe, like in Spain. All good stuff, right? Because it brings diversification to our real estate portfolio. Then you have Slate Office REIT, which has a nice 7.5 or 7.4 a dividend yield, but it's trading at a huge 39% discount with a super conservative payout ratio of under 80%, which is pretty much unheard of. So both REITs have had solid rent collections because they have very reliable and credit-worthy tenants. So one thing people ignore is the fact that these high-quality office buildings are typically rented out to government agencies or big corporations who could afford it, right? So it's not a surprise that the rent collections have been stellar for both these REITs. I also want to mention that I do have a third pure office REIT in my portfolio. I mentioned it before, TNT.UN. That's the True North Commercial REIT. So they focus as well only on office real estate in Canada, all over Canada, and have been doing fairly well as well with rent collections. That also could be a good pickup right now, but unfortunately I couldn't find the NAV price per unit in all their investor presentations or their documents. I actually emailed them. I didn't get a response. So for that reason, I'm leaving it out from this video. So again, I want to warn you guys not to bet the house on these REITs. Okay, no matter how compelling they might seem, they are still small, single REITs, which only invest in niche office real estate, right? But if you have some cash laying around, these can be great long-term investments for both capital appreciation and income, which is what we're focused on, right? So I strongly believe that all the talk of the office being dead is nonsense. The office is not dead, in my opinion, and we are already starting to hear the rumblings and the headlines about companies mandating employees back to the office gradually. Will there be bumps along the way? Sure, of course, but the time is definitely now to snatch up cheap office REIT shares while people are still kind of fearful and hesitant. The deal will not last forever because no deal does, right? So take a small position, hang tight, and collect that sweet office rent income while you wait. What's better than that, guys? As always, please support me and this channel by hitting that like button. It's free for you and I would really appreciate it. It takes 2 seconds, so please hit that like button. Also, make sure to visit our website, guys, passiveincomeinvesting.ca. That's when you could access my digital product, the Ultimate Dividend Passive Income Investing Package version 2. It comes with lifetime updates. I'm working on version 3. So this tool is really designed to help you start building your portfolio. It's like a reference tool. It has sample portfolios as well to help you get started. And it's great for Canadians and Americans. There's also American funds and sample portfolios in there. You could also book a one-on-one consultation with me personally on my website. However, I am full until October. I'll let you guys know when the October appointments are open. And finally, make sure you're subscribed, guys, so you don't miss out on my future videos and content, which is all designed to help you on your passive income investing journey. We're on Instagram, we're on Facebook, so join us there if you use those social media platforms. Our Facebook group is growing. We just hit 3,000 members, so we have a nice little community there where you could ask all your questions and people reply. It's really cool. Our mission, my mission, always remains the same, guys. It's to help everyday normal working people to invest on their own in order to build their own source of passive income so they can enhance their quality of life. So with that, take care, guys. Continue to stay safe and see you next time.